Dog, that is $831 video. They have now partnerships with NVIDIA, right? Because we are in that phase of the cycle. It works in cycles and it works in trends. Let's get into it. Here. Hope you guys are doing blessed. You already know how I'm doing, man. So what I got for you guys today is really just the outlook from Monday. So I'm going to skip all of the geopolitical stuff just because, I don't want to try to keep you guys here forever. I know you guys are probably just looking for the gems, so let me hit y'all with that. But anyways, without further ado, you already know how we do. Let's get into it. First asset that we looked into is Jet.AI. And man, when I really started to understand what they were doing, who they are, and what they're planning to do, I was like, how? You know what I mean? Like, how do you even have a plan like that? And it was crazy because what they are essentially becoming is the AI backbone for Canada. So they recently just sold off their charter app. And this was their kind of bread and butter, okay? They went through a merger with this company called Fly Exclusive, okay? This company, Fly Exclusive, stock's sitting around $3, I think, right now. But they have a lot of connections. When not only do these guys, not these guys, but Fly Exclusive have already a real solid foundation that's continuing to expand. When this merge and acquisition happens, we also receive their stock while still keeping Jet.AI stock. But if you were to hop into this company and let's say you bought 195 shares, which is $81 US, and it ran up to 471. Dog, that is $831. Now, I can't tell you exactly when they'll get up there, but with what they've been seeing in their news recently, I suspect that this is going to lead them or put them in a position to benefit massively, one, off of the short-term opportunity being presented in the market, especially with small caps, and then two, as well as the long term. So if you were to put, like I said, $81 and they ran up to 471, that's where I got my take profit. That is $831. That is wild. And I don't think they would get up over there overnight. Okay, this is something that would progressively build on itself. But where they're at right now at this 40 cents range, I think that this is the almost best time to get in because they recently just seen a massive dilution. But check this out, okay? The reason that they seen a massive dilution, it's the same thing as a bunch of other small caps right now. They recently just all seen a massive dilution. Why? Because we are in that phase of the cycle. We are in the small cap phase of the cycle. So when you're looking at what's happening right now with how stocks are starting to dip, how the commodities and the energy recently just seen a massive run, right? If you look here, it goes in this cycle, it goes gold stocks, we got silver, then we got copper, the energy system, and then it goes into the small cap, and then it goes into Bitcoin, Ethereum, and then we really start getting into the cycle of the primary assets that the world kind of revolves our attention around. And this time that we're seeing right now, this is a time when these small caps will see a lot of attention. Because we know a lot of institutions are in this market right now. Like, this is an institutional led market this year. And this is like the first year we've ever actually seen an institutional led market. And it's these companies that they get in on when they're at times like this. And that's why we're seeing a bunch of dilution happening. But they got diluted heavily, man. Like, it's crazy. And the time that they did it was right before all of the stocks and all of the crypto, assets really started to come down. If you guys noticed, crypto's been quiet, stocks have been quiet, and all of your biggest companies right now are coming back down. Why? Because it's the cycle. Man, the market works in two ways. It works in cycles and it works in trends. That is what creates market structure. And when we see the market structure look like this, basically what's happening is we are piling up cash. We are piling up a shit ton of cash. And what better way to do it other than companies like this? And the craziest part is when the institutions get in on companies like this, not only do they put a shit ton of money in them, but when they do take money out, it's not even like they take all the money out, because they know that this is the next up and coming, not industry per se, but the next up and coming business that could potentially revolutionize a sector in some shape or form. These guys not only revolutionized the way they track jets in the flight industry, they're also becoming the AI backbone for Canada. What? So if you guys take a look right here, right? This just got posted 2 hours ago. They may sell up to $35 million of common stock. Now look at this. This was 3 hours ago, okay? Now, I don't want you guys to start FOMOing in just because I'm showing you guys this news, but what this news essentially does is show us, yeah, these guys, they got something going. They aren't just a bunch of randos that are in this game trying to pile up a bunch of cash and basically just dilute their stock and fuck everybody over. No, man, this is deeper than that. They actually have a legitimate business structure that is now starting to really see some attention. And Vanguard owns, I think, 14 million shares in them. No, 4 million shares in them. And then another company, Ionic, if I'm not mistaken, they recently bought up 14 million shares. Well, this happened September 30th. But when they bought up those shares, I started questioning it. Like, why did they get in so early? Because they seen the emerging market opportunity that was being presented here. The institutions don't give a shit if they get in a little early because they know what's to come. When they got in, it's likely they didn't even actually get in when they said they got in. They probably placed a limit order way lower than what we expected them to have, where we would have expected them to have bought at that time. It very well could. I don't plan to completely offload all of my shares at 47 or at $4.70. I only plan to offload a portion of them, and then I'll see how the market reacts, and then I'll make my decision if I sell off the rest. You might be wondering, is Jet.AI at a really good time to, or is Jet.AI at a good time to buy right now? Personally, I loaded up at $39.93. So I think if you're getting in between that 39 to 35 cent, no, that 40 cent to 35 cent range, you're chilling. Is basically what I'm trying to say. You're chilling. Now, that's not to say it's a guaranteed play. There's risk in this, obviously, but there's risk in living life, so what do you really define risk? But anyways, man, yo. Okay, so that's big, especially if you're holding this company. So when I started looking into them and really started to understand what they're doing, because I'm like, but I don't get it. They went from dealing with jets and AI and using AI basically to track these jets and everything. So, how do we really put this all together? So they didn't just use AI in aviation. They literally trained their AI by running a real airline. So almost think of it like this. Every flight they operated as a real world lab test, their AI, so the charter GPT, this is what they were using to basically train their AI. So they would book complex trips instantly. They would adjust plans in real time weather, and then they would optimize fuel use and manage high pressure, high cost decisions, all automatically. And these are the exact skills needed in order to run an AI data center. So instead of rerouting a jet, the AI reroutes computing power. Man, I'm telling you, it is wild when you really start to understand who these guys are. So when Jet.AI says it's moving into AI infrastructure, it's not starting from scratch. It's taking the AI brain that it already trained on real flights. And keep in mind, these guys have been around for a while. I think they've been around since like 2016 or 2018. So they have time in the game. And with this AI brain that they've trained on flights, they're now applying it to run AI data centers smarter and faster than others. Last year in April is when they actually entered Canada. And this is where it really gets deep. So, this was what they were talking about for the merge, and this was, or no, this is them talking about one of the other companies that they're now merging with, and this is consensus core. Okay, consensus is actually really big too, especially when it comes to Canada. So on April 30th, 2025, Jet.AI announced a joint venture, so sorry, not a merger, with Consensus Core to build hyperscale AI data centers in Canada. We already know how important these data centers are right now, especially as AI is still being developed. This is a collaborative investment. Jet.AI is investing up to $20 million across 5 milestones to develop 500 milliwatts plus data center campuses. And these guys, right, where they're locating themselves, it's very strategic too. But what this does is it allows Jet.AI to essentially exit the aviation business because they already sold that off to Fly Exclusive, right? That's the merger that's happening. But while the merger's happening, they also got other stuff happening behind the scenes in Canada. And not to mention, you guys notice Canada is one of those countries that has kind of been delayed when it comes to the implementation of AI, tech, and everything. You know, we're more of like a sovereign country opposed to a rapidly evolving country. Now, that's not to say we aren't a rapidly evolving country, but at least from my understanding on what Canada is, that's kind of how I see it. Doesn't mean you gotta agree. But Consensus Core Tech, so basically what I noticed with Consensus Core, it brings AI infrastructure know-how, technical talent, and it even brings in NVIDIA partnerships. Okay? Consensus Core is connected to NVIDIA. They have partnerships with NVIDIA. And not to mention, they're also a part of this company called Cologix, I think. This was also a part of the partnership when they partnered up with Consensus. And they provide immediate physical infrastructure when they were entering into Canada. So basically what it looks like is they have Consensus as their way of entering into Canada early before everything starts happening. That way they could position themselves one step ahead of the game, almost exactly like GPUS did. So together, they create a full stack AI infrastructure play. They combine land, power, cooling, capital, technical execution, basically positioning Jet.AI to scale rapidly across Canada with 2 sites targeting 1.5 gigawatts of total capacity. And where they're doing it is areas that are perfect for building AI infrastructure in Canada, at least. I know one location's in the Midwest. I forget where the other location is. The next company that I got for you guys here is called Ring Energy Inc. Yo, honestly, these guys too are gonna be, man, both of these guys I think will be really big, not big players, but I think throughout the course of the next couple of years, they could see a lot of attention early on, so coming up, as well as a lot of attention as they continue to grow and expand. And the system once it starts demanding these types of infrastructures, ah, it's it's just money all day at this point. Ring Energy Inc. REI. What they are is a small but focused oil and gas producer in the Permian Basin, and this is one of the most important oil regions in the world. And they are responsible for, or it is responsible for 47% of the US's daily oil production. Now, while these guys are not a global giant, its importance lies in its operational efficiency, asset consolidation, and financial disciplines, especially in such a volatile sector. Okay, so this is Ring Energy. This is their website. Ring Energy, here it is, a growth-oriented, independent exploration and production company engaged in oil and natural gas. You guys know how attractive oil is right now. You already know. You already know, especially with all the conflicts that's happening. It's for legacy, power, and most importantly, it's about that energy. Well, not most importantly, but a big part of all of this is to basically hoard up the energy, because energy's it's going to be like vital as we continue to move forward. But these guys right here, they actually have real good financials. Like this last year, they seen a total revenue of 323.74 mil. Cost of revenue has been looking really good. The net income, the net profit margin, like financially wise, these guys are really stable. And I think honestly, the fact that they're structuring themselves in a way where it's like we're in a world that's chasing shiny new energy models. Ring Energy represents grounded reality. They're not going to scale by trying to reinvent themselves like what we're seeing right now. And I guarantee we'll see a lot of companies go kind of under because they're trying to catch this emerging market opportunity. But at the same time, the emerging market opportunity isn't where everybody thinks it is, at least right now. At least right now. So they're scaling by doing the basics better than anyone else. If you guys know any of the greatest of all time when it comes to almost anything, they were good at doing one thing exceptionally well. Okay? So, like I said, they're not trying to become something they're not. They're doubling down on being exceptionally good at what it already is. And that's a lean, disciplined oil producer in the Permian Basin, one of the most productive oil regions in the world. Okay? This is huge. And recently, I think it was December 31st, they had an institution buy-in on them. It was a 179.48K that they bought for shares. Okay, so that's about $156,000. But who else is in on this is real big. So Vanguard, they own 10 million shares in this company. Barclays owns 8 million, and Columbia owns 5 million. Vanguard, BlackRock, and State Street, if they're heavily bought into an asset, you can almost guarantee there's a reason behind it. Now, that's not, I've said this before, that doesn't mean just FOMO in, but when you do see institutions like this a part of these types of companies, especially this heavily in these types of companies, like institutions own how much ownership in this company? They own 28.53% ownership in this company. I think that tells you something right there, right? There's a reason why they own it, because they know what's happening that other people don't see. And it's the plays like this that always go under the radar, and they only get talked about when they're blowing up. So they have a lot of stuff going on. And not to mention, they have a senior secured revolving credit facility with a reaffirmed borrowing base of $585 million under a $1 billion facility. So this was extended to June 2029 and is supported by an 11-member banking syndicate, which is led by the Bank of America as administrative agents. So they're even partnered with the Bank of America. Like they're man. So what they do is they acquire and develop oil and gas assets. They focus on mature conventional fields, and then they produce oil and gas profitably. But they don't use AI. And I think a I think a big thing with AI and how it's being pushed into the system, I think a lot of individuals overlook the fact that AI doesn't replace oil, okay? It amplifies oil's demand. So this company, it's not trying to compete, right? It doesn't care to compete. It seems more like they're grounded within their original roots because they plan to keep it that way. They realize that AI isn't at its full potential yet. And if there is this AI crash, not saying there will be a full on AI crash, but we're kind of seeing an AI bubble right now. So, as AI is still being developed and they're not reliant upon AI, this is a quiet strength that they have in the current market cycle we're in. We're in a day and age where tech is being so heavily pushed into our system, it's being pushed in faster than they can even keep up. But it's companies like this that stay grounded in the original roots that still play a core role in how this system develops. Because you need companies like this that are fundamentally sound in order to keep this system going, because they're not trying to do all these upgrades, right? And that's not to say that they're going to be a big ass player in this space, but there'll be a bigger player than what people actually think. Is 94 cents with a 195 million market cap. That is wild, okay? So yeah, guys, I got a buy-in at 79 cents. You'll see here. This is an area that I have talked about in the Patreon before, so if you'd like to go check it out, you'll hear me talk about these zones, these blue lines, these relative equal lows. You hear me talk about them all the time, relative equal lows and highs. This is where I'm looking at right now. So I hope you guys enjoyed. If you guys got any questions, I didn't clarify anything, or you're just kind of curious to know more, feel free to give me a shout, man. I always love communicating with you guys and being able to help you guys in whatever way I can. But anyways, stay blessed from the best. Peace and love.